Asset manager DWS beats estimates with clients pouring 8.7 billion euros into its funds in the second quarter. The influx of new money signals confidence is returning after the company saw outflows of 2.5 billion euros in the first 3 months of the year. We're joined now by Claire Peel. She is the CFO of the Deutsche Wertpapierspezialisten. Claire, thanks so much for joining us. Talk to me about the rebound that we've seen in the second quarter. What was behind these massive inflows?
Yes, indeed. Good morning. So we've seen in the second quarter 8.7 billion of inflows across our platform, and that's inflows across our passive ETFs, 6.5 billion leading the way with cash, but also with active equity. So a really strong rebound in net flows compared to the prior quarter. I should point out, of course, in Q1 that January and February was also very strong, and it was, of course, March where we saw the extreme downturn. But we're seeing that kind of revert, certainly in the ETFs in the second quarter. What's driving the 6.5 billion? Certainly in Europe, we've seen exceptionally strong flows there. We have ranked second in terms of inflows overall in Europe, and first in terms of equity flows in ETFs. So I think the equity ETFs are also demanding interest in addition to fixed income, and also in the US market where we've seen ETF inflows there as well. I should also point out that ESG is a very strong theme. So we have seen ESG inflows contributing half of our inflows overall in the first quarter, and a large portion of that is again across ETFs. So I think it's very positive to see the trend shifting away from not only cash, which continues to be a safe haven, continues to be strong, but ETFs and also some of our active retail funds, including equity.
Yeah, I wanted to ask you about the reaction of retail investors and institutional investors. Has there been a pronounced difference between the two?
There's certainly been some different behaviours. So on the institutional side, there's been some discrete decisions to redeem some mandates. So we saw that in fixed income, where we had a net outflow position, but really driven by 3 institutional mandate decisions to insource assets. But aside from that, there is demand from both institutions and retail clients to invest in funds and to gain a yield. And we're very much kind of seeing that across the asset classes that we've seen in our Q2 results.
You mentioned active investment has, I guess, picked up, is what you're saying, Claire. You know, the last time we talked to you, or in the last quarter before that, passive was winning the day for sure. And I always think it's fascinating to see how that battle is playing out. Are your clients really coming back to active investment in force?
Well, I think certainly passive and ETFs is leading the way in this quarter. I think there's no question there. We can see that in the numbers. So passive is leading. I think there's a strong demand from clients there, and that's demonstrated in the results. But if you look within the active asset classes that can deliver good returns, good product performance, and a good return on investment for our clients, then certainly when you kind of peel the onion a little bit, within multi-asset, within equity, within SQI, we're seeing across all of those areas client interest and investments being made, but slightly overshadowed in the second quarter by a few mandate outflows. I should also point to alternatives, of course, which is another asset class which continues to have interest. So our real estate European Grundbesitz portfolio is also performing strongly. So I think clients want to see returns, they want to see product performance, and that's what we're delivering. And the ESG theme is also very strong, and that's what we're delivering for our clients this quarter.
Claire, it's been a tough year for asset managers. You've rebounded more quickly from the sell-off than others. What's the biggest risk to reaching your financial goals this year?
Well, certainly we've seen a strong rebound in the markets in the second quarter. If we look at our assets under management overall, we've made up about 2/3 of what we lost in the first quarter, and we stand at 745 billion now. So we haven't got all the way back yet, but certainly a strong rebound. We are constructive in our outlook for the second half of the year, so we can see some more upside on that. But of course, we're cautious in terms of what's ahead of us, and given that, we're focusing not only on on the top line on revenues, but we're also focusing on efficiencies. We're focusing on shareholder value and profit overall. And that's why, given the volatility that could be in front of us in the markets, we will continue to be very focused on cost efficiencies and on costs.
I got to ask about Wirecard. Massive story, obviously, here. I mean, a company that had been under suspicion for years all of a sudden says we can't find 2 billion euros. With hindsight, it seems crazy that people didn't pay more attention to the smoke around this fire. Are you going to be bringing in lawsuits here? Are you suing in this instance?
So, I mean, Wirecard is certainly a really exceptional case of fraud, and indeed, where we have a fiduciary obligation to bring legal proceedings against Wirecard, we will indeed do so.
Claire, thank you so much for joining us. Oh, go, Matt.
No, I was just because you were a big shareholder there. I wonder what kind of return you think you can get. What can you get back?
Well, I think if we focus on what we are an investment manager indeed, and we do take active investments, and that's the case of what we did in this particular case, on the basis of a strategic investment criteria on technology funds. And obviously, this is an exceptional situation, and we will be monitoring the situation very, very closely to ensure that we do meet our fiduciary obligations. But no specifics, of course, I can comment on.